What's going on, YouTubers? Just want to show you guys exactly where I made a nice little um, $400 play here, which was kind of fire. It was somewhere in this area, this movement, right? Um, but I want to talk about, looking at Jarvis intelligence and then using that Jarvis intelligence to further help with, you know, confluence and understanding the context, right? Um, so this is where we are. I just paused it for this time, right? This was a massive move on M&Q today. Incredible move. And Jarvis was able to catch that, which was fire, right? So this buy signal came in, and by the time the A confirmation candle, the next confirmation after the signal printed, we had all this information already. It was an A key, 6 samples. The win rate was 100%. That means every time this A key structure showed up, it won its TP. TP for the journaling is 1R. That's what I have it set up as, 1R. But look at the additional. The average was 5.25R. That was the average. Out of all these samples that it has in its that it's journaled, 696 samples that it's journaled, that's what we got. Um, this was an incredible move. I'm not gonna lie. Now looking back at it, there's a couple of ways you could have entered into this structure. Okay, because everything is about when these structures print, it's all about entry and how you enter and how you exit, right? And how you protect your capital while you're entering, right? So you could have entered in 3 ways. You could have taken the Jarvis route with two entry doors on Jarvis. You could have just saw that this was a buy with an entry that equals market. It wasn't even a limit. It was a market. So Jarvis felt the momentum. Jarvis felt the momentum on this key. Because for it to say market is a very rare occasion. Most of the time it's going to be limit. But when it says market, you got to take heed. You got to start paying attention. Also start to pay attention to the key as well. This was a key. So you know this is a structurally the strongest type of structure that you can get involved with. So there's 3 ways you could have entered. 2 ways would have been Jarvis way, and then the third way would be the fractal model TTrades way. And I'll explain that. So the Jarvis way, you enter at confirmation. Boom. Say, okay, cool. I'm gonna enter here. Candle close. Pull it right to this smart stop loss, which is this green line here. Now, normally for me, I do 1R, man. Okay, that's how I trade in this market because this market is unforgiving. But I may have been a little bit more froggy this time because why? This candle buy signal just closed above this bearish manipulation. When this happens like this, you're normally going to see either a bounce or maybe a slight dip and then a reversal. And then your next stop is here, which is the bullish distribution. This is the top of the line. Like when you look at the map of your chart, this is about as far as you should trade from an OHLC standpoint. 2 degree, I think his name is Joshua. That 2 degrees developed this indicator around. The highest you should go is here. So on this at 6 o'clock in the morning, I could have just entered and said, okay, you know what? I'm just going to enter here and just be froggy and bring my TP here. That's 7.4R, guys. This would have been an incredible win today. And I would have hit that by 9:30 because this was the what? 9:30 candle. Easy money, right? And it started at 6 something in the morning, which was three and a half hours before market open. So that's one entry. The one entry is right from confirmation. That's a Jarvis entry. The next Jarvis entry would have been from the A2 print, which is the commitment. So Jarvis has a confirmation entry and it has post confirmation. When Jarvis first was developed in the beginning, many months ago, it was only based on confirmation only. But then the thousands of lines of code that was added to add the post confirmation intelligence, which is in the F row and in this DNA row. When this A2 printed, you could have entered here. Now, what's the difference? We're about to find out. Enter here. As you can see, you lost about 1 R. Okay, lost about 1 R. In both scenarios, this dip was not there yet. This dip was not there, right? So now you got 7R on the confirmation, 6R some change, 7R and some change on the confirmation A, 6R and some change on the A2, and both had a risk of being stomped out, right? Because look where it came to. That needle came right on top of that green line. So that means when you're using the stop losses, smart stop loss from Jarvis, you need to make sure that that line is underneath, not before the green line, but underneath the green line, like this. You know what I mean? That'd probably be the safest, because at least you got like about maybe a tick or so of potential wiggle room, which is still a very narrow wiggle room. This was a narrow play. Okay, you could have probably, if another tick came down just a little bit more, you would have been stomped out. But nevertheless, it came to that line and then it reversed. Okay, so um, this is 6.26R. So that's the second one. So the first one was Jarvis confirmation. The next entry was Jarvis post confirmation. Both would have netted crazy R's. Okay. Now here is the 2 degrees TTrades Fractal model entry. This pops up. You wait for a retracement. This is like a small, shallow retracement, and then a large candle reversal. That's where you enter. You pull your line still to the same spot, but let me tell you what's going to be the difference. Now, you see, now it's 4.9R. So, okay, so which one is better? All depends on how you're feeling. This was an A key. Okay, A keys and the entry equals market. This is like Jarvis saying, yeah, buddy, I mean, nothing is guaranteed, but there's a high probability you're going to win on this from a 1R perspective. So if you had entered here, you would have hit your 1R right over here. You would have been fine if you stayed at 1R. But in the end, we wanted to go to where? The distribution line, right? So we still had a ways to go. But nevertheless, which one is better? In my opinion, the fractal. The reason being is because you let this happen. You let this signal come through A prints with all this juicy information. You still don't take the trade yet. You wait for that reversal, and then you wait for the pullback and then the V-shaped reversal. Then you enter. Because what happens now is with the A entry and the A2 entry, this never happened yet. So this didn't happen yet. With this though, with this entry for the T-Trades fractal model entry, you saw this happen already. So now this is now your protected swing. So you like you see that it came right to there. It came right slightly below this a bearish manipulation line. So you just entered right there. You're like, okay, I know this is protected. I know now, but now here's the beauty of it. I know I'm entering on a structure that has created a protected swing. I know that this structure is an A key with 6 samples with 100% win rate. I can trust this. Yes, you are losing about almost 3R, but you still got 4.9, but you're 4.9 with more confidence. So that's where you use Jarvis, right? You use Jarvis for this type of analytical data to give you some ideas on where things are or whatnot. But this was a really, really dope structure. Loved it, enjoyed it, got some good money out of it today. Looking forward to see what Asia's going to do with all these green candles. I believe Asia's going to take all of these green candles back, and I will be there for that with my short, obviously. But that's how you would enter. So three possible entries into this A structure. Two of those entries being Jarvis entries, and then the last being the TTrades Fractal model entry that deals with candle closures and basically uh, pullbacks and then V-shaped, responses to those pullbacks. Hope you enjoyed the video.